Hello everyone. Well, here I am shooting on location because someone has to be here, otherwise this beautiful location would go all to waste. So why not bring some economics out into this beautiful parkland? Today in Australia we saw, which makes it even more odd that I'm doing the broadcast from here because I'm going to talk about unemployment and working. Unemployment in Australia, 4.2%, a massive new low. Fantastic result, absolutely fantastic result. Number of unemployed went down, the number of full-time workers went up, the number of part-time workers went up. Across the board, a good number. The participation rate, a little bit maybe disappointing because it remained the same. And we all know there's been a massive withdrawal of workers from the workplace. Not so much as in other countries perhaps, but it's still prevalent in Australia to some degree. But the big problem, of course, is not unemployment. The big problem is having workers to fulfill the roles that are available. And really, the low unemployment number actually highlights how serious that problem is in Australia at the moment. So in other words, this massively great low unemployment number that we would normally celebrate is actually an indication of how much the Australian economy is missing immigration, student travellers who work part-time. All those people are still really not coming here in any significant numbers to speak of. And so hence, more jobs available for Australian workers, hence Australian unemployment at near record lows. I mean, the United States did have 3.5% unemployment under Trump, so perhaps we should be even lower than we are now. And we know that a lot of businesses are sometimes having partial shutdowns because they simply can't get the workers. And that immigration boom was a big part of Australia's economic growth across all aspects of the economy. So the 4.2% unemployment number today, definitely to be celebrated, but with a big asterisk that this is a function of there being few immigrants, few part-time workers from overseas, still very little global travel. And that's a significant asterisk. When you think about, does this unemployment number really mean the economy is booming? Not so much, but it is a strong economy. I've said we're going to have a firm to strong economy with below trend economic growth. Nothing's changed there. I continue to argue the RBA should be immediately sacked. A lot of people around the world would agree with that view. I really don't know what's going on with the Australian media that we just seem to talk up our RBA. It's almost like we're a football team and we have to barrack for all our players regardless of their performance against the other teams, and that's not how it should be. What we should be thinking about is what's best for the Australian people who pay for all these people to have all these great jobs in these institutions like the Reserve Bank and the Federal Parliament. And why can't we get some action to get world's best practice in our central bank? Why is that such a big ask? Okay, one of my favorites, as you know, markets or other economic data, strong imports in Japan. So, you know, the supply chain, global supply chain starting to function a little bit better. The Japanese economy is edging its way off its knees, which is great. So that's good. Also, the housing data in the US in the last 24 hours was a little bit better than I expected. I've been warning about how soft it would be, and it certainly has plummeted. The housing sector in the US, not prices, but the housing industry and the housing sector overall. There's a little bit of a bounce in mortgage applications, not something to be overly excited about. But some of the other things like building permits and things in the US did have a reasonable sort of stabilization to recovery sort of releases, so that was good to see. Overall though, I put out a report this morning highlighting the risk of a possible Russian-Ukraine conflict, and I think we can use the word war in that regard without being exaggerating at all. I mean, if things start to fire off between Russia and Ukraine, Russia moving into Ukraine aggressively, it will be a seriously violent conflict. So war is the appropriate word. Keep an eye out for that, because I think the impact from that, if you didn't see my written report today, the impact from that is likely to be stock market, at least initially, and possibly on a medium-term basis, significantly lower, because remember, I'm already bearish the stock market for reasons other than such a conflict. So that would just fall off the cliff a little bit, certainly in the short term. Gold would be higher, maybe to $2,000 US very quickly. Oil would be higher, maybe through $100 a barrel very quickly. And I think also the US dollar would be very strong. So the euro might be very quickly to 107, even 105, and maybe in the months ahead even to parity. I was around when the euro was introduced actually, and I said the euro would go up for the first 3 days and then it would fall away for the rest of the year, the first year it was created, because I'd done a tour, investment banking tour of Europe, talked to all the biggest major corporations, and they were all hedging in advance against the euro going up. Everyone thought the euro would go up, so they already bought all their French francs and Deutschmarks, which automatically became euros on the first day of the euro. So they were already hedged pre the launch of the euro, so there was only one way it could go down. Is down, and that's because once everyone who's wants to buy a market has bought it, it can only ever go down. Doesn't matter if good news comes out. If everyone's already bought and there's no more buying to be done, a market can only go down because everyone who's bought has become nothing but a sea of potential sellers. So my regular readers would have heard me say that on numerous occasions. Apologies. But I think it's something very important to remember. At the moment in the US, we've still had massive foreign capital flow into the United States. That's definitely supported the equity markets. It's definitely showing up in the US dollar. And I think we can expect more of that. So more US dollar strength. Now, which kind of conflicts with my view on oil and gold, but the view on oil is very much a conflict view, Ukraine conflict view. Gold, I'm bullish, but that could be accelerated by a conflict. I'm extremely bearish the euro and the Australian dollar in any case, but again, a conflict could exaggerate or accelerate the moves that were going to happen in any case. And don't forget, my target for the Australian dollar for this year remains 65 cents. I hope you're having a good afternoon and all the very best to you. Thank you. See you again soon. Clifford Bennett, Chief Economist, ACY Securities.